playing the long game here. I would even say, and this is provocative, that people think, Apple is behind on AI. I think that they've actually been forward, and there's a lot of things that have gone into this device that I think they're eventually going to engage. They're going to add more, generative AI, probably another Siri in the future, and it's all going to work with the device as well.
Kathy, it's been a week where we have just leaned so heavily, understandably so, because of earnings, into the big tech mega caps. So I think about our investor audience a lot when we talk about something like spatial computing, or obviously every day, or it seems like every day, about AI. What companies does our audience, or does the investing audience kind of need to be focusing on in this environment? Because sometimes it's the big names, sometimes it's smaller players.
I would definitely say, the big players like Meta and Apple, of course. I mean, Samsung obviously is going to be doing things in the market, but that's the hardware component of spatial computing, right? There's a whole software component that is Unity, for example, and game engines, and now Unity has had a bit of a terrible time. But anything related to the software, related to spatial computing, even LLMs are part of the software that we're going to be incorporating into these future devices and whatever we use after the mobile phone. And then data, there's going to be a lot of information on data and connectivity. So I don't know. For me, it's almost like asking me to bet on it's almost asking me to select a share or a stock related to mobile computing. You can't. It's a whole domain, and it encompasses hardware, software, data, and connectivity. So it's really hard to just say one, to be honest.
Kathy, what's the opportunity for you and your new company, your co-CEO at Spatial Dynamics? What's the opportunity that you see out there for a company like yours?
It's really early, right? So we're launching very, very early because we believe in what's coming. We think a lot of these companies are going to want apps in the Apple Vision Pro. Or where I think it gets interesting is when you look at maybe an iPhone 16 or a 17 or an Apple Vision Pro 2 or version 3, there's going to be more and more demand, and also more devices. You already have Meta saying they're going to support spatial video. So I think a lot of companies are going to want to port their apps into spatial computing. They're going to want to create new experiences. And even the enterprise, I think, eventually is going to be really interested in kind of how they're going to be able to use spatial computing at scale.
How do you, as someone who really understands this space, spatial computing, no pun intended here, but how do you, kind of separate hype from reality?
It's very hypey right now, and I'm very excited, right? So I'm living through the hype. I'm surfing on it right now. But I would say it's a long-term play, right? Like mobile computing took a while to take off. I was one of the first people that didn't have a first iPhone. I was still on my BlackBerry, right? I never thought I was going to give it up. Lo and behold, now I have an iPhone. So I think it's also that it's going to take a while. So it's not about this first device, right? Apple's game is not to sell millions of these devices right now. This is a version 1, and it's going to seed the market for those spatial interfaces. Those spatial interfaces are going to be devices like the Vision Pro, but they're also cars. There's going to be phones. There's going to be all sorts of devices that are going to use spatial computing. So that's the long-term play, is thinking about this is as revolutionary as mobile computing was. And, mobile computing really gave us, the Ubers and the Airbnbs of today. So think about what that's going to bring in the future.
All right, we're going to leave it on that note. Some really cool stuff and some insight. Kathy, thank you so much. Have fun playing with it. I know you played with it before, but have fun playing with it this weekend. Kathy Hackle is Co-Chief Executive Officer at Spatial Dynamics, joining us on Zoom from Washington, D.C. I think it's interesting when we've spent so much time talking about AI that we haven't talked as much about spatial computing.
Yeah, and the two are,
they're
related to one another. Yeah, but they're intertwined for sure. Hey, let's get on to Washington, D.C. now for checking the latest world and national news. We got Nancy Lyons in the Bloomberg 99.1 newsroom. Hey, Nance.
Thanks, Tim. It's been under discussion for weeks. Now the Senate could come out with text as early as today on a deal to tie aid for Ukraine and Israel to tougher restrictions at the border. Connecticut Governor Ned Lamont says with the migrant surge just a state over in New York City, the U.S. needs a more secure border, and he says President Biden agrees.
He's come out strong. He said, give me the tools. I will shut down the border to illegal immigration. He was very clear on that. Maybe you wish he'd said that sooner. He's saying it now. The ball's in Congress's court. You're going to give him the tools to get the job done.
Connecticut Governor Ned Lamont was a guest on Bloomberg Surveillance. The judge determining how much Donald Trump must pay in his civil fraud trial says he needs more time to make a decision. Judge Arthur Engoron has already missed a self-imposed deadline of January to issue his decision. The court today says it's looking like early to mid-February for the verdict. Closing arguments are underway in the trial of Jennifer Crumbley. She's the mother of Oxford High School shooter. She went under cross-examination today in her involuntary manslaughter trial. She and her husband are being tried separately for providing the gun that was used in the shooting. She says they never anticipated how the gun would be used.
We didn't just hand him a gun as a here you go, son. It was something he could use when we went to the range as a family together.
Jennifer Crumbley faces 4 counts of involuntary manslaughter in connection with the mass shooting. Actor Carl Weathers, who was once an NFL linebacker, has died. His best-known role in acting was certainly as Apollo Creed in the Rocky film franchise.
I want all of America, I want the whole world to see me destroy this man after 2 short rounds. Because after this fight, he's going to have to donate what's going to be left of his body to science, but there won't be much. That I can guarantee you.
His family says Weathers died peacefully in his sleep. He was 76. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg.
From Bloomberg World headquarters, I'm Charlie Pella. 340 on Wall Street. We've got stocks moving higher. S&P holding very close to session highs. The Dow, the S&P, NASDAQ, all in the green. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks with a strong bid. After a slow start, the Dow is now up 200 points. S&Ps are higher by 61, while the NASDAQ is up by 1.8%. The U.S. 10-year yield is back above 4%. Gold is down 16, oil trading in the red, but Bitcoin is little changed. Among the main 11 S&P sectors, leaders were telecom and consumer discretionary. Materials, real estate, and utilities were under pressure. And leaders to the upside in the Dow, Chevron and Caterpillar, while Intel and Walgreens led to the downside. After earnings, Facebook soared as much as 23%. Amazon climbed by 8%. Apple was little changed. In other news, NVIDIA's price target goes to 800 from 700 at Bank of America. And wrapping things up, Walmart and Costco climbed to all-time highs. Live from the first breaking news desk on Bill Maloney. Charlie.
Okay, we thank you very much, Bill Maloney. And to hear live breaking news over your Bloomberg, type SQUAK, SQUA, on your Bloomberg terminal. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, just about 18 minutes left in today's trading session, getting ready to wrap up this week. And yeah, it's going out with a bang. I mean, you heard Charlie breaking down the numbers. We're up still 1.8% on the NASDAQ. Really, the tech sector once again leading the charge here, Tim.
You know what's interesting? Not really a lot of breadth on the S&P 500. 260 stocks are higher. 242 stocks are lower.
So kind of an even split here. So disproportionately,
yeah, which I'm really surprised to see that, given the, I don't know, the excitement that I'm kind of like, I'm not feeling excited, but I'm sensing excitement.
Yeah, definitely you feel it, certainly when you think about some of these big tech names. Having said that, a big reason why is some of the economic reports we got this week, and a big one this morning. Neil Dutta, I have to just share this with everybody. He's over at Renaissance Macro, sharing that strong growth in labor productivity means unit labor costs are under control, which is a good backdrop for corporate earnings. So let's see what our Drive to the Close guest has to say about that. With us is Philip Palumbo, founder, CEO, and Chief Investment Officer at the private wealth manager Palumbo Wealth Management. They've got approximately $400 million in assets under management. He is on Zoom from Great Neck, New York. Philip, great to have you here with us. That monthly jobs report, productivity gains, how is that, in your view, a reset or recalibration, if at all, for how you think about the type of investment opportunities that you might want to position your clients in?
Yeah, first I want to say that really this market move that we've seen has been such a win for long-term investors that have been patient the past 2 years. Now, the S&P 500 is only up just about 7% cumulatively the past 2 years, and money markets pretty much perform the same. So for long-term investors, being patient, you really got rewarded. So the big question for me, Carol, is are we going to continue to make higher highs here as we're looking at the market, as we think about this year? And there are really three reasons what I'm looking at that's exciting me. Number one is earnings are going to continue to accelerate in 2024. Two, the Fed is going to cut at some point this year. And three, it's an election cycle, election year. So those three things are really a strong recipe why the markets continue to move higher. But the key thing is that in the very short term here, I do think we are overbought. You have to be patient, look for pullbacks, and there are opportunities to do so.
All right, first up, though, the election cycle. I got to ask about. This could be an unusual one, an interesting one, although it is expected.
Already is, I would say.
It could be, and is highly expected to be, a rematch of the current president, Joe Biden, and a former president, Donald Trump. There is some nervousness around the outcome, and whether that creates some instability kind of in the U.S. Political scene, if you will. You think we can compare this election cycle to election cycles of the past and what it means for the markets?
I mean, I do, because there's two potential candidates, right? And we kind of understand where Trump stands as it relates to regulation, taxes, which I think taxes is really a big part of what Trump could do. Maybe just continue to keep the current tax code in place, where maybe you can see a rollback if there's a Biden's elected. I think immigration and controlling that is a positive for our economy on the Trump side of things. So I do think it's the same. It's a Republican, it's a Democrat. We both I have an understanding of what they're looking to achieve if one of them are elected. So I do think it's the same. I don't think I think it's a non-issue.
Okay, what about the Fed cutting rates this year? I know this is Carol's favorite parlor game to play, but because of the hot labor data that we got earlier today, and given what we heard from Fed Chair Jay Powell earlier this week, traders are pairing their bets that the Fed's actually going to cut 6 times this year, and it's looking more like the 3 to 4. When do you think the Fed cuts, and do you actually care when the Fed cuts?
Yeah, listen, we're long-term investors. I mean, playing the game of when the Fed's going to cut, how much is going to cut, it's not really a great game to build wealth over time. But to answer your question, in my view, I mean, I thought in December he was way too dovish. He realized that. He became hawkish just on Wednesday. And as a result of that, the market cut back from 6 to 3. That's about right. I had a feeling that was going to happen. I thought we'd see some more volatility with markets declining as a result of that, but obviously we have not. So I just think that, the economy is much stronger than investors anticipated. As a result of that, the Fed may hold off on cutting rates longer than people are anticipating. So I see a cut right around the May period is what I'm looking at.
Well, what I want to know is what your clients are asking you about. These guys, if you're doing wealth planning, you've got a lot of private wealth management that you are obviously doing, whether it's family offices and so on and so forth. They are long-term investors, or they tend to be. So what are the investments that they most ask you about? What are the investments you most often put them in?
Mm-hmm. Yeah, so our clients that come to us are families and individuals that built businesses and sold their business, and they're looking to really create a balanced approach, protect first, grow second. So with that type of an approach, we're really well diversified. We'll balance in private real estate, private equity, emerging growth, long duration treasuries, intermediate term duration treasury, and then an equity portfolio. So we're really well diversified with a good risk-adjusted return. So it's I almost describe it as kind of boring, but it's what our clients want to protect their wealth in the event you get an economic shock.
What would be like a typical allocation to private equity right now?
I usually like minimum 10%. Historically, I always say that the best way to grow wealth over time is stocks, real estate, and private equity. Those 3 asset classes have proven to return somewhere north of 10%, compounding over a long, long period of time. So I think in order to achieve any type of good risk-adjusted return from private equity, I think 10% minimum is a really good allocation.
How much exposure, or are you getting them into private credit?
Mm-hmm. So private credit, I would say same thing, 10%, 5 to 10%. I mean, I like private credit a lot. My only concern, it is a saturated market. There's a ton of money that's being thrown out there. We don't really understand what's underneath the hood. But if you stick with a really good manager, we use Ares, A-R-E-S, a great manager, has a great track record. So if you stay with the great managers out there with a proven track record, that are conservative when it comes to allocating capital, that's what gives us confidence in investing in that particular area.
How much cash do you have on the sidelines right now, waiting for a moment to get into either the equity market or somewhere else?
You said that, cash on the sidelines.
Yeah.
So it depends on the client. If you're a newer client, there's probably still about 20%, because I think we're a little bit overbought here. But if you're a client for a while, yeah. So for newer clients, let's say you started with us just 2 weeks ago or even 2 months ago, about 20% right now is still on the sideline waiting to deploy that capital. For clients who've been with us for a while, you're at about 5 to 8%. That's down from about 30%. So we've been allocating over the past 2 to 3 months a lot into equities.
Anybody calling you up and saying, hey, where's my exposure to Meta? Where's my exposure to Amazon? Just quickly.
Yeah, no, that's okay. So yeah, we absolutely have exposure to both of those areas right now. Meta, not so much, but Amazon, we do have a nice exposure to within client portfolios.
You did see what Meta did today, did you not?
Very nice move on Meta today. They've really done a great job finally waking up to getting away from the metaverse and getting into operation control and operation cost control, which has really helped them tremendously. I mean, from that day when they announced that, the stock is just to the moon and back. So they really done a nice job. Thank God they made a transition call back back last year.
A year of efficiency sounds well. You got to remember that people lose their jobs in all of this, so it's certainly got an individual story. Yeah, Phil. Hey, listen, thank you so much. Really appreciate it. MetaShare is still up about 20% today. Philip Palumbo, founder, CEO, and chief investment officer at the private wealth manager Palumbo Wealth Management on Zoom from Great Neck, New York, folks. We're just about 10 minutes away from the close.
your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. We do have shares of Meta Platforms holding on to a gain of 20.3% after earnings. Amazon shares, they're up 7.8%. Meta and Amazon soaring after delivering quarterly earnings and outlooks that far exceeded Wall Street's expectations, validating the belt-tightening strategies that have defined the tech industry's past 16 months. For all the hype over AI and its potential to bolster profits, Meta and Amazon stood out as winners of the big tech earnings season for the simple reason that they have cut tens of thousands of jobs and their core businesses did well over the holidays. Meta Platforms certainly worth repeating, up now by 20.4%. Apple, after earnings, trading lower. Apple posted a return to sales growth after 4 straight quarters of declines, but a 13% slowdown in revenue from China is overshadowing an otherwise solid quarter. Gene Munster with Deepwater Asset Management thinks this is more about an economic slowdown in China than a full-on shift away from the iPhone.
There is a dynamic of what's going on with the government and their commentary about buying Apple products. Now, if you look at the number of government employees, this basically can create about a 3% headwind to China's business. It's not a formal policy to avoid Apple products. It's been this informal kind of wink and nod. But I think that probably plays in all this too. When you roll it all together, I still think China's a big opportunity for Apple. India is becoming a bigger opportunity too, and I think that this storm will pass.
Gene Munster of Deepwater Asset Management, and again, Apple shares little change right now. They are down less than 0.1%. We're on track for a record for the S&P 500 index. Those are our top company stories at this hour. I'm Charlie Pellet, and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
It is Bloomberg Business Week. Tim Stenevec and Carol Masser. February is Black History Month, and every day this month we are celebrating significant moments in U.S. Black history. Now with your installment for February 2nd, here's Bloomberg's Justin Milliner.
Why, thank you, Tim. On this day in Black history in 2009, Eric Holder became the first Black U.S. Attorney General. He was tapped for the role by then-President Barack Obama and ended up serving more than 6 years. This made him not only the first Black Attorney General, but also the third longest-serving Attorney General to date. Eric Holder delivered remarks to the Department of Justice and their employees at a special Black History Month in his first month on the job. And the speech made waves in Washington for its pointed assessment of race relations in the United States.
Though race-related issues continue to occupy a significant portion of our political discussion, and though there remain many unresolved racial issues in this nation, we, average Americans, simply do not talk enough with each other about things racial. It is an issue that we have never been at ease with, and given our nation's history, this is in some ways understandable. And yet, if we are to make progress in this area, we must feel comfortable enough with one another and tolerant enough of each other to have frank conversations about the racial matters that continue to divide us.
When Eric Holder stepped down as AG, he made way for Loretta Lynch. Now, she became the second Black person and the first Black woman to serve as U.S. Attorney General. And that's today in Black history. Carol and Tim.
All right, Justin, thank you so much. No, really significant if you think about like how long, right? And just not only being the first, but the duration or his tenure, if you will.
His tenure is impressive. Government, we've seen it especially the past couple of years that it could be pretty short. You could change out at the drop of a hat.
I remember that speech. It wasn't, I mean, again, like we said yesterday, this was not that long ago. I mean, 2009. We're talking just over a decade ago at this point. But pretty remarkable to see what happened since then. As you mentioned, Loretta Lynch becoming the second Black person and first Black woman to serve as U.S. Attorney General.
Yeah, right after him. And it kind of shows you, at least in my mind, the fact that Barack Obama was president, that having a person of color, having diversity at that rank, at that level, it brings more diversity overall. And that's why diversity in leadership matters across the board.
Absolutely. Well said. Justin, thank you so much. Justin Milliner, look forward to his next report. Hey, folks, we've just got about 2.5 minutes left in the trade. Time to head over to our TV colleagues Beyond the Bell. It starts right now.
let's just take the victory lap for a week that looked like it was going to be a down week, ending on a high note. 133 points, 134 points higher on the Dow Jones Industrial Average, good for a gain of about 0.4%. That's your relative laggard, or at least compared to the S&P and NASDAQ. The S&P 500 higher by 52 points, or about 1%. This is actually going to be the first time that we've had back-to-back 1% gains on the S&P 500 since the start of November. That's also going to be good for a fourth straight weeks of gains. Similar story for the NASDAQ Composite, up for a fourth straight week on the back of a 1.7% gain on the day. And as Alex Steele was just talking about on the television program, your big laggard on the day, some of those cyclical stocks, the Russell 2000, Carol, down 0.6%.
All right, guys, and as we dig a little bit deeper into the S&P 500, as we said, kind of a split day. 223 names to the upside, 276 to the downside, 4 unchanged. Guys, want to guess what the best performing name in the S&P 500 is this week?
I can
Peloton.
Wrong. Try again.
Formerly known as
platforms.
Facebook.
Yeah, exactly. Up more than 20% today.
Can I just point out?
Or this week. What?
Well, you just sent the redhead. It added $197 billion in market cap.
You know,
the biggest gain in market history. And we remember, what was it, a couple years ago when it was like Apple and Amazon on the same day? Or no, it wasn't the same day, excuse me. Amazon was like first, and then a few months later, Apple, and they were like right around 191 billion. Everybody thought that's just insane.
So less than 18 months ago, Meta Platforms, rebranded as Meta Platforms.
Yeah.
The fall of 2022, shares fell. Everybody was like, okay, what's going on with this company? A lot of people left it for dead. It's up more than 450% in that time. It's also laid off a lot of people.
You know who's had a really, really good day?
Who? Yes.
Mark Zuckerberg.
But
that's his taxes.
But to Tim's point,
stop.
well, the taxes.
I love it, Alex.
Until he sells, there's no tax.
All right, so his accountants also had a good day.
Is he?
No, he just borrows against
really
the shares.
paying taxes? I mean, come on. I mean, he's a billionaire.
Hey.
Oh, but in all seriousness, but to Tim's point too, though, what got them that 400% gain? It wasn't the metaverse.
No,
it wasn't AI.
No, you're
it was
absolutely
good
right.
old-fashioned
Returning to
ad
the core
sales
business.
on that core business, which is exactly what investors. And I'm glad you brought that up, because you remember every time you've had these big sell-offs in Meta, whether it was the Cambridge Analytica scandal or some of the other big missteps they made, you always saw this big rebound, and it always came for the same reason: a refocus on what made them what they are, and that's basically they're a social media platform with a gigantic ad business.
Yeah, they're bread and butter. And let's not forget also the implications of a 50-cent a share dividend and the $50 billion stock buyback were sweeteners for investors, and maybe broadens their investor base as well, now that they're a growth stock that's growing gangbusters and a dividend payer as well. All right, let's take a look at the sector performances here, and what you're seeing is communication services, that's Meta; consumer discretionary, that's Amazon; and infotech, that's NVIDIA, leading the way. The laggards here are utilities, REITs, and material stocks.
All right, guys, let's get to some of the individual gainers today. No surprises. I've got Meta and Amazon both on them as we talk about kind of the ongoing superlatives when it comes to both of these names, Meta in particular. Both of them, tightening their belts, cost cutting. That was something that was a theme with all of our conversations with a lot of the tech names. Outperforming. Amazon reported its best online sales growth since early in the pandemic. Both of them, robust sales for Amazon, strong profit outlook. We know the stories, but nonetheless, you had Meta Platforms up more than 20% in today's session. Switch it on over to Amazon, just finishing off its highs of the days, about a 7.9% gain. And then for something a little bit different, although I thought it was interesting, we had an IPO yesterday, Immerse continuing to climb in today's session. Of course, its IPO up about 15% in the past 2 days, adding another 11% alone in the Friday trade, guys.
Did you see Deckers today? You didn't have it on your board. I know you're a big Uggs fan.
I didn't. I do like Uggs. I've had multiple pairs. And the dogs have also chewed multiple pairs.
That closed at a record high today.
They own Hoka too, right?
A lot of them.
They own Hoka, and that drove a lot, and of course the Uggs and everything else.
There was a lot to choose from today, I have to say.
Well, you did a decent job.
Thank you.
Okay, breathe a sigh of relief because Apple stayed in the red for me. This was, moving between gains and losses today, but Apple did end up falling half a percentage point or closing half a percentage point lower. It was down as much as 4% earlier in the session, but bounced back. Investors looking past deepening slump in its China business. Investors continued to digest that earnings report throughout the day. Stronger iPhone sales in the holiday quarter returned to revenue growth following 4 straight declines, but demand in China certainly a spot that investors are keeping an eye on.
Did you see the footage of the release of the Vision Pro?
Oh, we've been talking about it all day.
No. Was it cool? Was it amazing?
I haven't even tried it yet.
Tim
but
Cook was there. He was in New York. He was just down the street. Yeah.
It's amazing.
I don't know.
Isn't
I mean,
that a
Tim Cook's
shtick?
at the Apple store trying to
Yeah.
hand out Vision Pros.
Yeah.
What does that say about the Vision
He's got
Pro?
to stand in line like everybody else, right?
Bloomberg News described the crowds as, quote, modest, which I thought was notable. I mean, look, it's a $3,500 device.
You know you can buy everything online now, Tim.
Mark Gurman
You
is
can,
still.
but there's still something about lining up at these Apple events. I mean,
Is there?
even not for me, but iPhones still bring people out there.
I mean, I remember being one of those reporters in the beginning of time when like you had to go and an iPhone event, you get up at like 2 in the morning, you go and you survey everybody. Here's something that we didn't talk about, guys, that much, is what we've seen in the bond market today. Because typically we see this kind of move in bonds, you'd be like,
Oh
whoa.
yeah, we had a jobs report.
Right. We have seen the 2-year yield up 16 basis points, right? We haven't seen that. At one point was the highest since March.
Keep
Same
going,
deal
Alex. Ignore him,
with
ignore
the
him.
10. I'm ignoring you?
Good.
Why am I
No,
ignoring
no, ignore him. No, go ahead.
Are you bored with bonds?
No, you can't listen to Carol.
No. Go ahead, Alex. Go.
Come on, Alex. You got to. I mean, I know you're new to this show, but
It's true.
just know, Carol just disrupts everything.
Right. Okay. So to that point, yields are up, guys. That was dramatic.
rich.
It didn't have anything to do with stocks, though. As stocks were up despite yields being up. Thank you.
Pretty impressive, right?
Yes, I agree.
Pretty impressive.
I always tell them, it feels like I'm back at home with my 6 brothers and sisters,
Yeah.
and this is exactly how it feels.
That's the sign of a great workplace, Carol, okay? When all of us can just make you feel like family, right?
I like it. I like the optimism there.
I mean, Scarlett, let's
Yeah.
go back to the bond market, right? It's been kind of impressive, like the volatility and the back and forth. I feel like Jay Powell, it's
Oh,
like
is that
his
what we're
crystal
supposed to do?
ball, like he knew what was going on.
He knew what was going on. His timing was perfect, right? He
Hey.
said March is off the table, or he didn't say those words exactly. He said March is very
close.
unlikely, and the data came in to
Connection
reinforce
lost.
that idea that, yeah, maybe March is pretty unlikely at this point.
Okay, so, I want to talk about something bigger here. You mentioned Jay
Bigger
Powell,
than rate
Scarlett.
cuts?
Yeah, no, I want to talk about Jay Powell being on 60 Minutes on Sunday.
Ah, yes.
And the significance of that. Because if you think about the audience that Jay Powell speaks to, right, people like us are glued to every comment that we hear from the Fed chair. But it's a pretty big deal when he goes on a program like 60 Minutes. And I'm wondering what the message that he has for Americans this time and how it's different from the last time he went on when we were in the throes of an inflationary environment and they were trying to get inflation under control.
So, Tim, I actually think that I've been thinking something similar. And I'm actually wondering if how people feel and what the data is, there's still a wide gap.
Yeah.
And I'm wondering if his goal is to try and bridge that gap. I have no idea. I'm just wondering exactly the same point. What is the goal for him on Sunday?
Well, I think that's it. I mean, remember when they did those Fed Decide, those Fed Listens events?
Fed Decides is our program.
No, yeah, right. Fed Listens.
I remember it.
Fed Listens, a little bit less
Thank you,
dynamic
Alex.
than Tom, John, and Lisa, but the same concept, which is really what you were talking about, which is the idea that there was this disconnect between expectations amongst quote unquote real Americans versus maybe what the market had, and of course what the wonky economists have, and the idea that you did need to sort of bridge that gap here. So we'll see what he has to say, but as you point out, the audience for 60 Minutes maybe skews a little older.
Not true. Kaylee Lines watches it every single week.
Kelly Lines is not your ordinary American.
It's true.
I think
All
it's
right.
safe to say.
I'm going to say my husband and I, we either watch it live or we, put it on the DVR and we watch it. We have dinner usually around it. So
DVR, wow.
Yeah. All right, guys. Alex and Scarlett have a great
have,
weekend. The other one, do whatever.
You have like a
No,
little bowl
have a
of,
great and
Werther's
safe
Originals right
weekend.
next to
Have
the
a great and
clicker.
safe weekend. Maybe he'll be asked about regional banks. I'm thinking about that. All right, guys.
It's Friday.
That is a wrap. Our
When's your-
cross-platform. Radio, TV, I can't hear you. Radio, TV, YouTube.
She's not listening.
Bloomberg Originals. We will see you again on Monday.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
All right, now to some sanity. Talk about the week that was. Kept us all busy. Big mega cap tech earnings, those magnificent 7 stocks. We also had our first Fed meeting of the year. Fed Chair Jay Powell going on 60 Minutes, as we just talked about this weekend. Very clear, though, it seems, about cementing the end of the Fed's aggressive campaign to push up interest rates, Tim.
Yeah, we've peaked in this monetary cycle. At least that's what he said. Chair Powell also rather clear about taking March off the table for the first rate cut, which seems to be a great call considering today's blockbuster monthly jobs report.
And as we said earlier, it feels like everything is awesome, but not so fast. Lots still to debate about the way forward and whether or not the fight against inflation is over and whether everyone is benefiting from at least what is laid out in some of these upbeat economic reports. The Fed has also pointed out, Jay Powell this week, that they're still on inflation watch. That is the very dense backdrop for tonight's Wall Street Week with David Weston. Coming your way at 6 p.m. Wall Street time on Bloomberg Radio and TV. David is joining us here in studio. It was a really, really dense week. And I feel like, David, we were constantly going from headline to headline, and some of it upbeat, some of it not so much.
Yeah, absolutely. Obviously, the Fed was a big story, particularly Jay Powell's news conference. And then we had the jobs numbers today. So what we managed to do this week on Wall Street Week is have two economists. We have both Paul Krugman and Larry Summers, who do not always agree on everything, basically, to give us a sense of where things are. I must say, Paul Krugman said he thinks the economy is in great shape. He says it's better than Goldilocks, because Goldilocks had some portions it was too hot and some it was too cold. This is both hot, where it's supposed to be hot on growth, and cold, where it's supposed to be cold on inflation. That was Paul Krugman's take.
I love that.
Larry Summers, on the other hand, is still concerned, as Jay Powell is, that inflation's not fully gone away, that we may need to have higher rates for longer. But one of the basic things I thought we should do with the two of them was ask them where the economists got it wrong. Because we've had a lot of economists saying a lot of things, particularly about inflation, how the economy's working, and both of them have had some problems with it. So, in fact, Paul Krugman has a new book out called Arguing with Zombies, and one chapter is how did economists get it so wrong? So we said, okay, where did you get it wrong? And so this is a version of what Paul Krugman and Larry Summers had to say about what went wrong.
What would have been a modestly inflationary fiscal expansion turned into something much bigger for a little while. It's kind of not surprising that people got that kind of thing wrong. We have we don't have any recent historical experience to base it on, and so there was a lot of guesswork involved, and most of us just completely failed to understand the scope. The less forgivable thing was all of the people, Larry Summers most prominently, but lots of people who said this is like the 70s all over again. And getting inflation down is going to require years of high unemployment. And there was never a good reason to believe that.
The outcome has been more benign than those of us who drew the implications from standard models predicted. I think if you look back, we recognize that there was enormous uncertainty, but yes, things did come back in a way that was more favorable than standard models would have expected, though I'm much less prepared to declare that it's all over than I think Paul is.
Just don't invite both of them to the next cocktail party.
Yeah, I think that's
or maybe
equivalent.
do.
I think it's equivalent to a smackdown among
I
economists,
think so
right?
also,
Particularly
yeah.
for Paul Krugman, who really went after Larry on this, has really disagreed with him. I must say, in fairness to Larry, he did get to hear what Paul had to say, and he said he thinks that Paul was off in saying it was all a matter of supply, that there was also the factor of how much fiscal stimulus there was, and he thinks that Paul is underestimating the weight of the Fed coming in with higher interest rates. There's a real disagreement between the two of them, although both of them were very happy with the economy. They say we're doing very well, and they're happy that the economy is doing well.
Look, I think it makes a lot of sense what Larry Summers said, that he's less prepared to declare that it's all over. And I don't think he's alone in that sentiment by any means.
Well, like Jay Powell.
Exactly.
Jay Powell said he's not so concerned about it going up more. And by the way, we asked Larry about that. He said, well, he's a little less sanguine even about the inflation accelerating. But he agrees entirely with Powell in saying his concern is it's just not going to go down. It's going to stay at an elevated level. And Larry thinks basically it's a higher, as we say, neutral rate. That is to say, the interest rates for a long time are going to be higher than we've seen in the past.
It's one of the part of the conversations we had coming off of the strong jobs report. You look at a data point or set of data points like that where everything seemed very upbeat and positive. You think about how much more difficult it is for the Fed to get to that 2% target, or at least stay at that target, especially if we continue to have strong economic data.
Yeah, you layer on top of that also the federal deficit and the federal borrowing that has to go on, which also tends to inflate, keep elevated the interest rates. And so not everybody agrees, of course, but Larry at least really does think we're looking at, he was saying he thinks on the Treasury bills we're at over 3% for the rest of the decade.
That's interesting. Hey, David.
I think that's right. Yeah, that makes sense to me.
I want to ask your thoughts on something, because we're getting economic data over and over again that is showing that this is a strong economy. And we heard it from Jay Powell over and over again. Maybe he'll talk about this on Sunday on 60 Minutes. Why do you think so many Americans aren't feeling that?
Well, that is a great question. I think there are at least two answers to that. One is it takes time. But two is, I mean, we talk about inflation going down. That doesn't mean the prices are going down. That means the rate of increase is going down. Right? And so if I'm paying more for milk that maybe I don't feel I can afford, the fact that it's not going up as fast doesn't make me feel real good. I still can't quite afford it. I'm really stretched. And by the way, for a long time, the inflation was above the wage increases. Wage increases are caught up now, but that's a fairly recent phenomenon. It's going to take a fair amount of time for the wage increases to be greater than the rate of inflation for people to really have more disposable income. They're still feeling a pinch from what happened for an extended period of time when their wages were not going up as fast as prices were going up. So they're still feeling it.
No, it's a really good point. Hey, also in your broadcast coming up in about 2 hours or so, a little bit less than 2 hours, you guys talk with the author of Chip War.
Yeah, great
Miller,
book.
which is a great book,
yeah.
and he's a great guest to talk about. And I do feel like we talked with our Ian King, who covers the semi-space, with all of the companies reporting earnings. A reminder that, you know, the semiconductor area has cycles, and it does feel like there's some real, a bit of a glut again in the semiconductor space. So
Well,
I'm curious what you guys wanted to get into.
It has cycles, but also the government's really getting involved in that business now with the Chips and Science Act, as you know. Billions and billions of dollars have been appropriated. By the way, essentially none of it's gone out the door yet. They expect some awards to be made maybe before the State of the Union address.
Right.
But we were talking with Chris Miller, because it is a terrific book, Chip War, about the extent to which China is involved in this business and the United States government's involved in this business. And as you know, just today we heard Intel is delaying its plant, in part because the federal government has been so slow to get the checks out the door. So insofar as President Biden was saying, I get to campaign on the fact I've got all this money going out to build chip plants and like that, it's not coming out right away. And there's a delay. Go back to your point about people feeling it.
Yeah.
People aren't going to feel it in the jobs either. If there's a delay in these checks going out the door, it may be past November, which doesn't do much good.
Shares of Intel were down 1.8% on that news today. I mean, this is a very big deal.
Well, they extended it a year or more. I mean, they were talking about 2025. Now it's 2026. And the larger point, of course, is if it is in fact critical for the U.S. government, for national security reasons as well as commercial reasons, for us to really catch up or get ahead on chip production, if we're delaying it, that's not a good thing. I mean, the rest of the world, China's now waiting. You know, they've got the subsidies going out the door.
Right. The Chinese government has no problem about getting money out there, right, committed to what it needs to do. And it takes so much longer in the U.S. But you think about it, right? Every day we say everything is full of chips. If we don't have them, what are we going to do?
No, exactly. But as you say, he just knows this stuff so well and can explain it so clearly.
Looking forward to that. That's Chris Miller on the Chip War.
I feel like I wanted more time, but, you know, I'm watching the clock and they're going to kick us out. Have a great broadcast. Looking forward to it.
Thank you so much.
David Weston with Wall Street Week. Be sure to catch it at 6 p.m. Wall Street time on Bloomberg Radio and Bloomberg TV. I'm Carol Master, along with Tim Stenovic. We're going to talk a little bit more about influencers.
Yeah, I'm looking forward to that.
Yeah, some diversity that's going on in that space. Folks, you are listening and watching Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. 4:21, the time now on Wall Street. Headline right off the Bloomberg Professional Service. Bank of America has cut CEO Brian Moynihan's pay 3.3% to $29 million for 2023. Previous year, he was making just about $30 million. So again, Brian Moynihan's pay cut 3.3% to $29 million. Meta Platforms' $197 billion surge is the biggest in stock market history. Meta Platform shares up 20% today to close at a record $474.99 a share. The gain added $197 billion to its market cap, the biggest single-session market value addition. It was an up day for the Dow, the S&P, and NASDAQ, who did close very close to session highs, with the stock market extending this week's gains as big tech rallied and a solid jobs report bolstered the outlook for corporate profits. Today, we had the S&P 500 index climbing 52 points, up 1.1%. That was the fourth straight week of gains for the S&P. The Dow up 134, up 0.4%. NASDAQ up 267, up 1.7%. 10-year yield 4.02%, with a 2-year 4.37%. Gold down $18 the ounce to $20.36, drop there of 0.9%. And West Texas Intermediate crude down 2.3%, $72.14 a barrel. Again, recapping, stocks higher today with the S&P up 52, up 1.1%. Meta the standout by far, surging 20.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Headline crossing the Bloomberg. The U.S. military launched an air assault on dozens of sites in Iraq and Syria used by Iranian-backed militias today in the opening salvo of retaliation for the drone strike that killed 3 U.S. troops in Jordan last week. And officials telling the AP, we too have that headline, U.S. beginning those retaliatory strikes, for the deadly drone attack in Jordan that happened previously.
Yeah, I should note the U.S. struck several targets in the two countries, those two countries, Carol, being Syria and Iraq.
And to be fair, President Biden and other top U.S. leaders have been warning for days that the U.S. would strike back at the militias. They made it clear that it wouldn't be just one hit, but would be a, quote, tiered response over time. The officials, of course, speaking on condition of anonymity to discuss military operations not yet made public, but we will continue to monitor and bring you any new headlines as they are known.
Hey, I want to switch gears because our next guest spent a decade at NBC Universal, ultimately becoming a communications executive before striking out on her own. Imani Ellis is founder and CEO at The Creative Collective. It's an organization that, in its own words, is building a more equitable future for thousands of Black and brown creatives. Imani Ellis joins us on Zoom from New York City. Good to have you with us, Imani. How are you?
I'm great, Carol and Tim. Thank you for having me.
I should note the Creative Collective, your company, also puts on CultureCon. It's a conference for diverse creatives and young professionals. Hey, tell us a little bit about your story, because you left a job that you started basically as a page. I thought this was really interesting at NBC. You're working your way up to an executive there. At what moment were you like, I want to strike out on my own?
Wow, it was such an amazing experience. I was in my dream job, loving it, working at NBC Universal. And what I realized was I really was in search of community. And so I invited a few friends over to my one-bedroom apartment. 10 people turned into 30 people, turned into 50 people. And I realized there was truly just so much hunger for education, sharing, and resources. And that's how the Creative Collective and then ultimately CultureCon was born.
So tell us about some of what you guys are doing today and what the Creative Collective does in terms of helping those who either want to enter the influencer economy. Talk to us a little bit about that.
Well, what we're seeing, the creator economy is now a $250 billion enterprise. It's not going anywhere. And we want to make sure that the creators, the Black and brown creators that are starting a lot of these trends, are equipped with the resources and the tools and the education to really compete in that market. And so one of the really great things that we're doing, is CultureCon. CultureCon brings together brands, creators, mentors, educators to really equip them with that education sharing. Everything from how to build your own deck, how to negotiate on your own terms, discovering if you need a manager, if you need a publicist, all of those tools are available at CultureCon. And then throughout throughout the year, we have classes where creators can really learn about how to find their zone of genius, how to collaborate with other creators, again, how to negotiate their rates, really getting into the nitty-gritty of those tools, those conversations, to really make sure that they have a seat at the table.
Imani, we were talking about this on our editorial call this morning, and our YouTube and TV producer, Elizabeth, brought our attention to some context when it comes to Black and brown folks in the creator community and what's happened over the last few years when it comes to really not receiving credit for their work. An NPR story from a few years ago talked about how Black TikTok creators are on strike to protest a lack of credit for their work. Talk a little bit about the history here and what you guys are doing to kind of change some of the pattern that we've seen.
Absolutely. Unfortunately, Black creativity is nothing new, but we really want to make sure that Black creatives are getting credit for all of the contributions that they are giving, to the social platforms. One of the agencies that we work very closely with is Kensington Gray. And Kensington Gray is really fighting on the front lines with these creators, making sure that brands are not only considering these creators, but also prioritizing them when they should, and not just during a certain time of the year, right? We want to make sure that when we think about the future of creativity, the future of equitable, creative influence, that it's not just during a certain time of the month or during certain themes of the month. Diverse Black and brown creatives are not just to be pigeonholed, for specific campaigns. They also have lives outside of Black History Month, Indigenous People Month. And for us, it's just really widening the scope of what America looks like, what the world looks like. In that perspective, it's diverse. And so I think we're seeing a new generation that's not going to, accept anything that's handed to them. They want credit, and there will be, voices that want to make that heard.
Imani, I'm so glad you went there. I have conversations like that with our Black colleagues here at Bloomberg. I think it's really important that we have Black History Month, but I feel like I want to be thinking about this 12 months of the year, every day. So how do you think about that so that it's not pigeonholed or that we constantly put people in pockets or groups in pockets? How do we do that?
One of the things that we do at the Creative Collective is we really work hand in hand with our brand partners, right? And so we're not asking them to come in and cook and know everything. It is about collaboration. And so a lot of our partners come to the Creative Collective and they say, listen, we want to get this right. You're in the community, tell us about the community. And the first thing that we say is, let us show you the work that's already being done. There's no need to reinvent the wheel. If you're looking for creatives that are talking about fashion, we know where to find them. And so I think, again, it's really pivoting. Not that these creatives don't exist, you might just not be looking in the right place.
I'm very curious about your business and how you're making this business work. I understand that it's a live events company and you do events throughout the year. Are you also doing consulting?
Well, I would say majority of our business does come through our sponsorships and our agency work that we do. We also do some consulting with our partners. A lot of the campaigns before they go live, they pass through our front door. And our partners have seen incredible success by putting that extra step. Instead of skipping over the culture, involve the culture. It's been really important for us and I think super beneficial for them.
Well, give us a specific story or two in terms of where you guys have come together, figured something out, and kind of the payoff, if you will.
One of my favorite kind of examples, and this was a few years ago, but we were actually invited into Condé Nast by Anna Wintour and her team. They wanted to talk about diversity in front of the camera and behind the camera. And so we came in, spoke with their leadership team. And I think for me, what that really showed was that there was an appetite to learn. There was an appetite to do better. And so we sat down with the executive team and said, listen, we are so, inspired and impressed by the diversity we're seeing on the cover, but let's also talk about the makeup artist. Let's also talk about who's doing their hair. We want to make sure that the model feels comfortable in her skin and that she isn't getting on the cover just to have realized, oh wait, this complexion isn't my color. And so for us, it starts all the way at the top, working its way down. And I think we were so inspired by Anna Wintour and her team for taking that first step and really inviting us into the conversation.
When you talk about kind of the digital age, the influencer economy, marketing, and all that great stuff, how do you think that can ultimately maybe reduce the gap that we see in wealth between Black individuals and the white population, if you will, like how do we break that gap? We've talked so much about the importance of wealth creation, right? That can be passed down from generation to generation. How do we get there? Through what you are doing, like I said, through an influencer economy or platform?
Yeah, I think, there's so many different lanes, and I think that we need them all, right? You look at Aurora James and the 15% pledge and doing, very important equitable work in terms of fashion and making sure that Black and Brown individuals are represented on the shelves. At the Creative Collective, we're doing similar work in terms of creative, equitable solutions. And so for us, again, it starts with education, opening up the doors, opening up the budgets, and making sure that we're not pigeonholing specific people during certain times of the year. I think we're also seeing in terms of creators, they're building their own platforms. The barrier to entry has never been, lower. And now you can build your own audience, monetize your own audience. And so I think we're going to see more creators kind of building their own shows, building their own audiences, selling ebooks, digital courses, merch, and realizing that they can actually be the drivers of their fate.
Imani, really cool stuff. Really appreciate you taking the time and joining us on Bloomberg Business Week. Imani Ellis, founder and CEO at the Creative Collective. They put on CultureCon, a conference for diverse creatives and young professionals. Creative Collective is an organization that is working to build a more equitable future for thousands of Black and Brown creatives.
All right, folks, back to geopolitics, something that is certainly we talk about a lot throughout the week. A headline just moments ago, the U.S. launching airstrikes against Iran-backed militias in Syria and Iraq in retaliation for a drone attack that killed 3 U.S. soldiers last week, marking a fresh escalation in a conflict that ignited with Hamas militants attacking on Israel nearly 4 months ago. The U.S. struck several targets in the two countries, according to an official who asked not to be identified ahead of a formal announcement. President Joe Biden did approve those strikes.
Let's bring in Bloomberg News International Economics and Security Team Editor, Larry Liebert. He joins us from Washington. Larry, good to have you with us this afternoon. I do want to get right to this news, of course. What do we know about the U.S. strikes taking place right now in Syria and Iraq?
This is really breaking news, and we don't know a lot. Our Jennifer Jacobs was among those who was able to confirm from officials what hasn't been formally announced, which is that the airstrikes that President Biden and the Pentagon had vowed to conduct have begun. There were a number of targets hit, as Carol said, in Syria and Iraq. But it's been said all along that this would be a multi-stage response at the time of the U.S.'s choosing. So I think in the coming hours, we're probably going to get some sort of briefing from the Pentagon and or the White House on exactly who they hit and how successful they say it was, and to what extent this is just the beginning of a retaliation for that deadly attack on the U.S. soldiers.
Larry, how should Americans and how should the world think about the escalation of the U.S.'s involvement in the region and in this war?
Well, the U.S. has said and continues to say that it's not seeking a wider war. And one significant thing to remember here is there's no sign that the U.S. struck or is about to strike in Iran proper, which really would be the flashpoint here, that they're striking Iran-backed militias. We don't know for sure yet that there weren't any Iranian forces on location in these places, but it's clearly a measure that stops short of a strike on Iran or in Iran, and the details will probably confirm that as the hours pass.
What can you tell us? I mean, there's just so much geopolitically going on as we speak, as, of course, the Russia-Ukraine war continues as well, getting close to starting, its third year. Having said that, Larry, I mean, talk to us a little bit about the various officials that you are talking to in and around the administration, kind of the tone, the mood, maybe even the overwhelming sense of everything that is going on outside the United States and overseas.
Well, yes, there's a lot going on all fronts. There's some indication that amid all the tensions in Ukraine, that President Zelensky may fire the head of the military. And so there are tensions clearly on all sides there. But what we have in the Middle East, again, is this multi-front activity and the U.S. effort to get it right, to do what they think needs to be done to retaliate for the attacks on deadly attacks on Americans but not escalate. And we'll see how this unfolds in the coming hours. It's a tough, difficult time for the Biden administration, for the U.S., but also for countries around the world that are either directly or indirectly involved in all these attacks on shipping and the warfare.
Right. We continue to try to assess the economic impact. I don't want to be inflammatory, but we've had guests who talk about a World War III and already saying, how there's more than 100 hotspots, if you will, or attacks, going on around the globe right now. So there's a lot going on. Having said that, there are also the military conflicts, the attacks, but there's also often back channel conversations that are often going on. What are you hearing about that? On that front specifically when it comes to what's going on in the Middle East? Because I feel like too, Larry, this week we were talking about maybe some movement towards some kind of settlement or potentially, some kind of, bringing this to a peaceful resolution.
Well, that's right. So even as this goes on, you're absolutely right. They just confirmed that Secretary Blinken is heading to the Middle East again to make many stops. So far, the public evidence is futile that he's either succeeded much in reining back Israel, the U.S. ally in the region, or are helping to secure a peace. But there is talk again of a ceasefire that would be paired with the release of Hamas prisoners. So things are happening on many fronts, and there are both tremendous risks, but also some significant incentives for folks to find a way out of these tensions.
If you're just now joining us, the U.S. has launched airstrikes against Iran-backed militias in Syria and Iraq in retaliation for a drone attack that killed 3 U.S. soldiers last week, marking a fresh escalation in a conflict that ignited with Hamas militants' attack on Israel nearly 4 months ago. We've been speaking with Bloomberg News International Economics and Security Team Editor Larry Lieber, joining us on the phone from Washington, D.C. I also want to bring in from Washington, D.C., Bloomberg News National Security Reporter Nick Wadhams. Nick, bring us up to speed on the latest that you know.
So what we know is that the U.S. launched a series of retaliatory strikes on Iraq and Syria. Some conflicting reports about just how many, but looking to be in the neighborhood of about 6 or 7. The key issue here is the U.S. at the moment appears to have elected not to target assets inside Iranian territory itself. That would have obviously amounted to a very significant escalation in this conflict. There had been some pressure on President Biden to do so, but at the moment he has restrained his attacks to Iraq and Syria. Some also unclear indications about what happens now. We do have some reporting to suggest that this is only the start of a rolling series of strikes. But whether this is the last of it for today, we're still trying to find out.
I just imagine the security meetings that have been going on inside and around the White House. Having said that, earlier in the week, the commander of Iran's Islamic Revolutionary Guard Corps said that the country was not seeking a confrontation with the U.S., but, quote, has no fear of war. Having said that, Nick, should we assume that we are going to see something in terms of retaliation from Iran, or that's not necessarily a smart assumption to make?
Well, I mean, we're getting into very difficult debates about deterrence theory. What's clear, though, I think, is that neither side wants a full-blown war. Iran does not want to go to war directly with the U.S. Obviously, the U.S. doesn't want to either. On the other hand, what you have seen is that these Iranian-backed proxies, whether they be in Syria or Iraq or in Yemen with the Houthis, have not been deterred by successive U.S. strikes. I mean, the U.S. has been hitting some of these targets in Syria and Iraq for several weeks. They themselves have come under attack more than 160 times. It was only this last set of fatalities on Sunday that killed 3 U.S. service members that provoked the U.S. response. There have been all sorts of about 12 or 13 U.S. strikes on Yemen, on the Houthis. They continue to target shipping. So we do still feel like we're in a bit of an escalatory spiral. Neither side is backing down. That's obviously drawing new attention, as Larry mentioned in your previous spot there, to the idea of a ceasefire or hostage deal, because that's really seen as the sort of underlying issue that needs to be resolved.
You're hearing from Nick Wadhams, Bloomberg News national security reporter from Washington, D.C. I want to bring back in Larry Lieber, Bloomberg News International Economics and Security Team Editor, also joining us from D.C. Larry, do we know anything about the targets that the U.S. has struck? Are these targets that are military targets? Are these targets that that actually have people in them? What do we know about the targets?
Well, let me just look. I am just reading now the confirmation for U.S. Central Command, and they indicated that they struck, and this is significant, in Iraq and Syria against Iran's Islamic Revolutionary Guards Corps, the Quds Force, and affiliated militia groups. So rather than just aiming at Iran-supported militants, they hit Iranian forces, but not in Iran directly. And so that's a very significant decision and an escalation. Command, they said they struck command and control operations, intelligence centers, rockets and missiles, and drone storage areas. And they didn't give many details, except say they struck more than 85 targets, including with bombers flown all the way from the U.S. So,
Larry, so these are not drone strikes. These are strikes by aircraft that are piloted physically by people.
Well, it included them. Now, it didn't rule out drones, but it said it included long-range bombers from the U.S.
Right.
So that's a significant move. But most importantly, that they didn't hold back. I'm sharing some of this with our colleagues here as we go. This is just great. But they didn't hold back from hitting Iranians. And that's key. It may be escalatory. It certainly sends a strong message that they weren't holding Iran harmless and allowing them to, if you will, hide behind these designated groups.
I'm seeing this too. At 4 p.m., U.S. Central Command forces conducted airstrikes in Iraq and Syria against Iran's Islamic Revolutionary Guards Corps. Quds Force, excuse me if I'm mispronouncing that, and affiliated militia groups. So I am seeing some of this statement too. U.S. says it struck more than 85 targets. Nick Wadhams, come on back in, Bloomberg News national security reporter. Oh, I think we've actually lost.
I think we got to go. I think Nick's got. I think we've got it. And I may have to join him to get some of this news on the Bloomberg terminal and on Bloomberg.com as well as sharing with you. But we'll be around in the evening. Eager to share.
Totally understand. Go to it. We know it's busy. We're gonna rehash too with our audience, but so appreciate Larry Liebert, Bloomberg News International Economics and Security team leader, who is also joining us with Bloomberg News national security reporter Nick Wadhams in Washington, D.C. Breaking news, and they got to be on it.
Yeah, the U.S. launching airstrikes against Iran-backed militias in Syria and Iraq in retaliation for a drone attack that killed 3 U.S. soldiers last week. This marks a fresh escalation in a conflict that ignited with Hamas militants' attack on Israel nearly 4 months ago. Go ahead, Carol.
Well, I'm looking at actually the U.S. Central Command tweet that was put out, and just to go back to it, as you were saying, and as Larry was saying, at 4 p.m., U.S. Central Command forces conducted those airstrikes in Iraq and Syria against Iran's Islamic Revolutionary Guards Corps. That is important, and they said specifically 85 targets. U.S. military forces struck more than 85 targets with numerous aircraft to include long-range bombers flown from the United States. The airstrikes employed more than 125 precision munitions. The facilities that were struck included command and control operations, centers, intelligence centers, rockets and missiles and unmanned air vehicle storages, and logistics and munition and supply chain facilities and militia groups and their IRGC sponsors who facilitated attacks against U.S. and coalition forces. Just wanted to get that entire statement out there.
Okay, so a lot of details continuing to emerge. I do want to point out too, Carol, the significance of the day, because today President Joe Biden did honor 3 U.S. service members who were killed in a recent attack in Jordan as their remains were returned at Dover Air Force Base in Delaware on Friday. The president joined by members of their families for what is known as a dignified transfer, a solemn occasion to honor fallen troops.
Yeah, it's interesting, and you do wonder, we often try and figure out, okay, what exactly does escalation mean in this environment? When you see headlines like this, it certainly many would assess much more, in terms of policy, and folks who watch military operations would say that this is indeed feels like escalation. What will be key is now what Iran does in response.
All right. Well,
if at all.
If at all, exactly. Well, from geopolitics to business news, time for an update to head on over to Charlie Pellet for what's going on in the business world. Hey, Charlie.
It was a big day on Wall Street, Tim and Carol. As you know, the Dow, the S&P, and NASDAQ all surged today. Jobs Friday, reaction to a lot of key tech reports. S&P, though, heads into the weekend at a record, up 52 points today, a gain of 1.1%. The S&P at 49.58. The Dow up 138, higher by 0.4%, and the NASDAQ Composite Index today up 1.7%, 267.31 on NASDAQ. Well, as for the outlook for rate cuts, Phil Palumbo is the founder and chief investment officer of Palumbo Wealth Management, and he was a guest today right here on Bloomberg Business Week.
I just think that, the economy is much stronger than investors anticipated. As a result of that, the Fed may hold off on cutting rates longer than people are anticipating. So I see a cut right around the May period is what I'm looking at.
Well, certainly a tech standout today. Meta Platforms surging 20.3%. Amazon also after earnings up today by 7.6%. Apple, though, lower today by 0.5%. 10-year 4.01%. The 2-year 4.37%. Gold down 0.8%. 2,038 the ounce. Bitcoin today down by 0.2%. Again, recapping stocks higher. S&P up 52, up 1.1%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. A very busy market and U.S. economic day. But right now, our most read story on the Bloomberg terminal in the past 60 minutes, the U.S. launched airstrikes against Iran-backed militias in Syria and Iraq in retaliation for a drone attack that killed 3 U.S. soldiers last week, marking a fresh escalation in a conflict that ignited with Hamas militants' attack on Israel nearly 4 months ago. But as we read that Central Command, U.S. Central Command statement, what was interesting is that we have the U.S. Central Command forces conducting those airstrikes in Iraq and Syria against Iran's Islamic Revolutionary Guard Corps. So we talk about the proxies, the Iranian proxies. This is not. This is, talking about something that is obviously, key to Iran itself. It's not, we're talking about necessarily proxies being attacked, but something else. Not necessarily in Iran.
Right.
We are noting that, but it does make it feel like a little bit of a more serious level, if you could.
The facilities that were struck included command and control operations centers, intelligence centers, unmanned aerial vehicle storages, and also munitions supply chain facilities of militia groups and their IRGC, that's Iran's Islamic Revolutionary Guard Corps sponsors who facilitated the attacks against U.S. and coalition forces.
Our Bloomberg News team reminding us that earlier in the week, the commander of Iran's Islamic Revolutionary Guard Corps saying that the country wasn't seeking a confrontation with the U.S., but has no fear of war. So just something to continue to keep on our radar. We're going to watch for headlines, but we also want to give everybody a heads up a little bit.
Yeah, we do. And again, we will bring people the latest here at Bloomberg Radio. Check it out, too, at Bloomberg.com and, of course, on the Bloomberg terminal. There actually is a transition from this to what's happening next week when it comes to earnings. We did hear from a lot of companies this week, of course. Meta and Amazon surging today. Throw in Microsoft, Alphabet, Boeing. It was certainly a big week. But we are not done because next week is a big one as well. Red Brown is Bloomberg News earnings reporter. He's back with us, and he's here in the Bloomberg Interactive Brokers studio. Hey, Red, I just want to talk a little bit about some of the companies reporting next week that actually find themselves economically affected by what's going on in the Middle East right now. What's on the agenda?
So the situation obviously continues to escalate, and it's having an immediate impact on a lot of businesses, especially some of the restaurants that we'll be seeing reporting next week. So McDonald's, as well as Yum Brands, so they operate KFC, Pizza Hut, and Taco Bell. So they're experiencing weaker sales within the Middle East region already. I think that's pretty self-explanatory. McDonald's also impacted in November due to social media calls for a boycott due to their alleged support. At least that's the kind of the phrasing that comes out of social media of Israel in that conflict as well, and that's expected to impact their sales quite a bit.
That was something Starbucks had to deal with as well. Like, it's just, we've seen this in a couple of different companies, but you do think about, we talk a lot about the Red Sea and the impact of goods taking a much longer route because of the concerns in the Red Sea and kind of the dangerous environment of the Red Sea, as we've seen attacks there as well. But it is something, right, as we go through these earnings report, it's not just about AI. It is about, kind of the real life geopolitical environment that especially these global companies exist within.
Absolutely, and we're seeing more and more attention paid to that on earnings calls. Just this week, we had Royal Caribbean call out that they're going to be rerouting some ships in the upcoming season. Carnival, the week before that, also came out with an early filings that they're expected to see an actual material impact on their business. It's expected to hit earnings by as much as 8% per share.
That's significant.
Wow.
Absolutely, especially for a company that's still in this recovery period, such as Carnival and the cruise line in general. So, so real dollars and cents, I think, as well. Maybe a secondary kind of effect of these things, but still important for us here.
We also can't forget what happened just a couple of weeks ago with Tesla, Carol, when the company came out and said, okay, well, since of the disruptions in the Red Sea, we are going to have to change the way we're doing business at our Germany plant as a result of supply chain challenges that stem from that conflict.
Right. So this is what we continue to parse through, right? We start off the year, or we ended the year saying, okay, here's all the risks for 2024. It's still early going in this new year, but when you start to see things like this, you do wonder how much more, whether it's a CEO or whether it's folks who are watching the financial markets, which have seemed pretty stable relatively through all of this, you continue to wonder as these things pile up whether or not there's going to be bigger costs. Obviously, a cost in terms of personal lives that are lost in the conflicts and the wars, but nonetheless, it's something we continue to assess. Let's just draw back a little bit. There are other earnings that are on your radar. What else should we be watching out for?
I think we could talk more about tech if you guys aren't too tired of
we're not tired of tech.
Well, maybe just a little bit different. Just another really big headline that came across today for Spotify renewing that deal with Joe Rogan. Huge deal. I think it's important because it kind of is a reiteration of this strategy that's becoming more and more successful for the company, really focusing in on their core brands, if you will, and their core titles. That is involved a lot of cost cutting, so they've trimmed a lot of their podcasts that weren't really getting a lot of traction, and that's really paying dividends for them now. They're actually expected to see positive operating margins. I think that'll be for the first or second time in the last 2 years. They should turn earnings positive within the next couple of quarters as well.
Shares of Spotify already up 18% so far this year. Hey, one thing that surprised me about that Joe Rogan renewal deal is that it's allowing Rogan to put his show on other outlets, which I thought the whole point of this Spotify deal when they signed it in 2020 was like he's exclusively on Spotify.
Right.
That's really interesting to me. It's a departure from what they've been doing in the past.
Maybe he's been watching us and being like, look at that Bloomberg Business Week. They're on radio, they're on TV, they're on YouTube, they're on Bloomberg Originals. We're everywhere. We've even done stuff on Spaces.
I'm going to go ahead and say definitely watching this. What do you think, Red?
Yeah, I think it can't hurt, I guess, to have just sort of like the ubiquity of that brand everywhere. I think now those two names are probably like associated with each other too. Yeah. So,
for better or for worse, for some artists who are like, I don't want to, be on the platform.
Yeah, I mean, we saw some of the artists pulling their music last year in protest, I guess, of his continued presence on Spotify. But the gravity around that show is, I think, a little bit too heavy still. So Spotify leaning in, and it's like I said, it's really starting to pay off. They've added 100 million new monthly active users just in the past year. So they're showing no signs of slowing down and turning that into a really positive earnings business.
No, Disney. What did I think Disney was next week? Not yet, right?
It's hard to keep them all straight.
I'm sorry. Chipotle.
That's your job, Red. That's not our job.
We're going to get Chipotle, and I know we're going to be checking up and catching up with the Chipotle CEO.
We do have Disney on the 7th.
Oh, we do?
Yeah.
All right, so we're getting close. We're getting close.
Yeah.
Getting there. It's a lot.
Chipotle.
I said that.
I know.
Are you listening?
I'm so hungry. You just said, so now my mind is going to burritos.
When there's breaking news, that means Tim can't go get his sandwich.
It's exactly right. Burrito season is just around the corner.
It is burrito season. Yeah. They've been hiring up big time. Like for Chipotle, here we are on this, blockbuster monthly jobs report, and something like a Chipotle. I mean, they've been hiring and need to hire even more.
Yeah, it's interesting. I mean, obviously, tech and Chipotle aren't anywhere near the same business, but like we've seen so many like job cuts at the higher end, the tech companies cutting, but Chipotle has this big surge, and their business is growing strong, growing their prices still, but also growing their foot traffic despite the prices increase. It seems like people are trading down. I don't know if is the right phrase, but like more people from higher income brackets are coming into Chipotle.
They make really good guacamole.
They do.
Quality is one of their kind of selling points.
No freezers.
What's
everything's fresh.
what's the guacamole machine called? Auto Guac or something like
I forget.
that?
Like,
it's something.
well,
you say technology is not a company.
That's exactly
a tech company,
what I was thinking.
You know, I guarantee you next week when Chipotle reports, they're going to just talk about their technology. They're going to talk about the app. They're going to talk about automation investments that they've made to make them more efficient.
I forget how long. I remember talking with the CFO about it, and
you went out to
specifically,
the headquarters, right?
I did.
Did you get any burritos?
We ate a little bit, but it was, you know, not capital intensive, human intensive hours that it took to, you know, kind of open up all those guacamole. You had to do it by hand. And so if you can automate it, like that is something that lets workers either be on the line and working with customers a little bit more. So it's pretty impressive.
Autocado. It's an avocado. It cuts, cores, and peels avocados.
I'm like, what is Tim doing? We're in a live show.
I'm like Googling avocado. I forgot what it was called. Yeah, this is last year they debuted it.
Top of mind for you when it comes through the earnings deluge for next week, and I do feel like it's a kind of a more of a cross section to some extent, or maybe kind of what consumers are up to some extent as well.
Yeah, Uber is another kind of consumer name, and this might pain some people. I don't know if we're gonna be able to make fun of Uber as a kind of a profit loser or like a loss generating company anymore.
I never make fun of it.
Not naming names, but
it is the poster child for venture-backed companies that end up going public and still, you know, not turning a profit.
Remember Amazon for a long time?
I think it's different, Carol.
I'm not saying it's apples to apples.
They
but
have
just,
not.
You know.
Yeah.
But Uber's finding its feet here. It seems like they're not. They missed. They lost in one quarter. I think the third quarter of last year. But if they post another profit this quarter and next, it'll be a full year for the first time ever of consistent earnings for the company. They're gaining in mobility. They're gaining in delivery, and that's despite some of their competitors trying to undercut them on price. So something's working there at Uber, and they have really good momentum.
They're at all-time highs right now.
Absolutely.
Wow.
Yeah.
Yeah, Uber. Well, it's interesting. Remember we talked about them getting rid of Drizzly or bringing it kind of in-house?
In-house, yeah.
Yeah, so I think what you're seeing, you know, maybe everybody's taking a page from Mark Zuckerberg's book, The Year of Efficiency, but maybe they're looking at their operations.
I thought you were going to say building a bunker under your Hawaiian comment.
No, not yet, but that too. But it's interesting. I do feel like we're seeing companies, when we talk about some of these big tech companies, they're looking at what their core business is, where's their growth, and increasingly saying, okay, let's focus, you know, or double down our efforts. You talked about Joe Rogan and what those folks are doing in terms of that's a programming platform that works. And so maybe you get rid of the stuff that just is underperforming.
It is interesting. I think
I'm not going to go Six Sigma and Jack Welch on you, but it's just like, you look at your portfolio, where is it performing and where is it not?
I mean, it's something that we have been talking a lot about in the newsroom just among ourselves is like, there's companies that are coming out of the pandemic that are